Hello and welcome to the weekly CFO Newsletter. Thank you very much for joining me. Well, you would have heard during the week that Tesla has purchased $1.5 billion in Bitcoin. Elon Musk jumps on board with cryptocurrency. Well, this is something that has been big news, and obviously it has caused Bitcoin now to surpass $50,000, which is pretty amazing in and of itself. Certainly been the best performing asset this year, no doubt about that. Tesla as well. But certainly if you look at Bitcoin over the last sort of 12 years, it's been the best performing asset 10 of the last 12, like buy and hold. So that's interesting. Certainly Bitcoin is something you want to be interested in, and certainly long term I think there could be some big massive gains to be made, but there's going to be incredible volatility as well, probably due for a pullback. But again, it's understanding how to actually trade it. Now for me personally, I do hold some Bitcoin, but for me personally, the way to really make the most money from Bitcoin is not actually buying it itself. So I have very strategic ways that I use options to actually benefit and trade and make a lot of money from the sudden moves in Bitcoin, up or down, very importantly, without all the headaches, without the wallets, without the hardware, without all the restrictions and all of that inconvenience that the cryptocurrency market presents, particularly to beginners. So, I've been doing very, very well with this. I mean, recently with this particular news story, I was able to make over a 322% return, not on Bitcoin, but on a stock related to Bitcoin. And once you know what these stocks are and you know how to trade them with options, you can actually make bigger returns than what Bitcoin will allow you to make. A 322% return in 3 days is pretty amazing. These are the types of things that I'm thinking of putting together. I'm not too sure yet. I'll talk a little bit about that in a moment. But yeah, certainly this was a big move. Okay, 1.5 billion in Bitcoin. But what a lot of people don't understand is some of the reasons why Elon Musk would do this. Obviously he sees a future in Bitcoin and things like that, but there's other reasons here as well that the average person doesn't understand. What about intangible asset impairment? Now, when we look at Bitcoin, okay, we understand that it will have an indefinite life. So when you look at indefinite life impairment, which is a accounting principle. Again, I'm not going to get too complex here. I don't want to start boring you to death with accounting. But really what this is saying is obviously that you need to be able to account for the impairment of an indefinite life asset. Digital asset like Bitcoin would be considered an indefinite life asset. When there is impairment, what does that mean? That means it's going down. Okay. So, an impairment cost must be included under expenses when the carrying cost of the non-current asset exceeds the recoverable amount. Which simply means that if Elon Musk buys Bitcoin now, as he has, say for around 42 or 44,000, whatever he got in at, and there's a pullback back to 32,000, then what he's going to incur is a expense, right? The carrying amount minus the recoverable amount, the current amount. So he's actually going to be able to use that as an expense and reduce his tax. Now, if it goes up, he gets to include that as an asset. So he's not actually paying income on it. So think about this. If the stock goes down, he claims it as an expense, reduces his tax under this indefinite lived intangible asset impairment that he must include as an expense. He reduces his tax, but if it goes up, he doesn't have to pay any tax on it because it's going to be considered as a revenue. He only has to pay tax on it if he sells it, which more than likely he will not do for a very long time, if ever. So it's a pretty good deal in and of itself, irrespective of whether Bitcoin goes up or down. The average person has no clue about this. Man makes last-ditch effort to recover 280 million in Bitcoin he accidentally threw out. Part of the issues with cryptocurrency is keeping it safe. There's been a lot of crypto wallets that have been hacked, people forgetting their password. One of the ways of protecting yourself now, the most powerful way to keep your Bitcoin secure and your cryptocurrency, is to have a hardware stick, a small stick that you actually hold, right? You actually keep. Obviously in a safe would be better, but actually keeping that. That's the safest way to keep your Bitcoin safe, okay? Not in an account, which you would do in a bank account or in a brokerage account, but actually a hardware stick. So what happened was this gentleman here accidentally threw his hardware stick that he had, his hard drive with 7,500 Bitcoin on it, in the trash. Today, it will be worth more than 280 million. He believes it's in a local garage dump and he wants them to be able to dig it up. He said, look, I'll go your halves if we find it, right? They're saying, no, that will present some environmental and funding concerns, so they wouldn't let him do it. But again, because he lost the hardware stick, he has lost that Bitcoin forever. Bitcoin investor lost 100,000 in botched up wallet migration, just simply transferring his wallet where he keeps his Bitcoin from his old computer to his new computer required a new password. He forgot the password, had a lot of issues with it, and he actually lost $100,000 from that. This man owns 321 million in Bitcoin, but he can't access it because he lost his password. Stephen Thomas has 2 guesses left before he's locked out of his fortune forever. My goodness me. What I'm thinking of doing, now let me know, okay, I'll only do this if you guys want me to, but put together a small program that will show you how to actually trade Bitcoin without this headache of needing a wallet, needing an exchange, getting ripped off, losing your hardware, a whole range of issues that people have when they're trying to buy Bitcoin. And I can actually show you how to do it using far less money, much safer, and much more effectively. And some of the returns we're getting will surpass even what Bitcoin has been doing. So if you wanted me to put together something like that, and this would be very powerful, I believe, but again, if you guys want me to do it, I'll do it. If you don't, then I won't, right? It doesn't really bother me. But let me know if that's of interest to you. If it is, make sure you're sending an email, please, to support@cashflowoptions with an S, all one word, cashflowoptions.com.au. If that's something you want me to put together in the future for everyone and show you guys how to actually get involved in that without having to go through all of these headaches and getting things started and all that type of thing, and the real lack of security, and really be doing that in a more secure way, but doing it with a market that's been around for 47 years, not a brand new thing like crypto, something that's been around for decades and decades. Show you how to do it in a more effective way, better returns, more powerful, and much simpler to do and safer. So if you wanted me to do that, let me know. If you don't get enough response, I just simply won't do it. So anyway, that's just a little side note. A few people were asking me about that. Now, let's have a look at the overall markets. Let's see what's going on here. The market is live as I'm doing this video. Ding, ding. Looks like we're down on the open. Obviously, that could change, but still everything, all the major indexes here, S&P 500, the NASDAQ, the Russell 2000, which has been on a tear, the DJ20, which is the transports, and the DJ30, which is the industrials, all above their 21 EMAs right now, and everything is still in bullish mode. However, I'm going to give you my thoughts on that in a moment. Let's have a quick look at the sectors while the market is open. We're looking at this on a daily chart. We are looking at retail, still looking a little bit weak, even though apparently there was very good retail sales in January. It doesn't seem to have had much an impact early on in trading. We're only, around 23 minutes into the market. Energy doing well. Yes, I think long term, long term, oil could still be a very good investment. It's a position that I got my members into a while ago now, paying off substantially now. There are certainly some potential opportunities coming up there as we speak. What are we looking at here? Biotech, right down at its 21 EMA. It's obviously been on a tear here recently, but showing some signs of weakness. But generally, everything is up at this point. However, if we look at the overall market, SPX would be the best way to look at that. We've got our opening range here, which we are still in bullish mode. We're above the 21 EMA and the 50, but we're a long way above the 50, and we're miles above the 200. At some point, we will get a reversion to the mean. I believe we are a little overextended right now, and we will reset our opening range this Friday. So this Friday, we'll set the high and the low of the session, the Friday's trading day. We'll set the high and the low of that day. That will then represent our opening range for the next couple of weeks. So that'll be interesting to see. 3,900 though in the short term, that would be your line in the sand. 3,900. You get a daily close below there, and a trip back down to the 21 EMA would be very, very likely, and even moving back down to the 50, which right now is sitting at 3,780. So keeping an eye on that 3,900 is a very important level right now, while we wait for the new opening range, and we'll be keeping a close eye on that. Now we do have our strangle on the QQQ, and this is obviously an area of the market that's been doing very well, but there are a lot of stocks within the Nasdaq that are looking a little tired right now. So we're going to wait and see. I mean, obviously, the main stocks there are the FANGs: Facebook, Apple, Amazon, Netflix, Google, and obviously Microsoft would be involved with that, but not really doing a lot. Okay, broke out of this ascending wedge pattern to the downside, bounced off the 200, and just sort of hovering around the 50. Not really doing much there as far as Facebook goes. Amazon recently had very good earnings, hasn't really done much either. Still above its 50, not saying it's bearish right now, but not doing a whole lot. Apple, have a look at that. These are obviously big players within the market in general, but certainly the Nasdaq. Apple moving down, looking like it wants to go below its 200. Again, this is just after the market has open, so we'll see what happens there, but certainly intraday looking like it wants to move down below the 50. Nothing bullish about that either. Microsoft, has been doing very well recently. Okay, has had some large purchases in Bitcoin as well, but this one at the moment is looking as if it's just a little bit tired, but still bullish right now. You wouldn't say that's bearish, but again, none of them are doing much, is what I'm saying, right? They're not really continuing to have that huge move higher that we've seen recently. What did I do there? Google. There we go. Google's still looking good though, right? Nothing wrong with Google. Google's still looking good. Maybe a bit of igniting volume here. So that one's still looking pretty good at this point. But the rest of the FANGs not really lighting the world up. Let's have a look at Netflix. Not really doing much either. So a couple of things there. One thing would be the VIX, which we have taken a position in. Okay, so let me just put in here the VIX, or the fear gauge of the market. This is another thing that we have to watch. That's up at the moment. Again, this is intraday. This could change, but right now it's up 3.36% intraday, looking like it wants to bounce off the 20. If it does start to move higher, the market will sell off. We've taken a position in that. We're about 15% return on our trade already, being bullish on the VIX just in a week. So that one's working out very well. Another position that we have on right now is at the DBA, Agricultural ETF. That hit our target. That has already hit our target there, which is beautiful, of 17. We'll take our profit now, which was a very nice return there of 32%. 32% in a month. We'll take our profit on that one, and we may re-enter later on. But that one worked out very, very well. If we look at oil, let's have a look at USO. yeah, certainly having a nice move at the moment. We don't have any positions in oil right now, but we do have them in the VIX and agriculture ETF, which we are just getting out of now. So there was what other one did we look at last week? BYND. Just looking at that one at this point, expecting a bounce here. We did get a bounce. We went from 168 last week to 173. Sorry, 183. 168 to 183. Again, not a position we're in, but one we're looking at. Hasn't really given us any sort of entry there. Maybe looking for it to come up and test the new highs, but nothing there. No position at this point. Another one we did have was CTRM. Do you guys remember me talking about this last week? If anyone got into this trade that I showed you last week, now I did this in pretty good detail for you. I showed you this bull flag last week, okay? And this one has worked a treat because I said, look, if we measure this bull flag, which is probably the pattern that's made me most of the money in my 20 plus years of trading, I said, look, from the top of the flag, which is around 74, to the bottom of the flag, which is 34, that's a 40-cent pole. So we project that forward. I'm expecting this to move to around 115 is what I said, right? If you go back and look at last week, that's what I actually said, right? So I was expecting it to go there. It closed this day at 119. Okay, so you're looking to get out. Okay, so it closed that day. The next day we're looking to get out, and what does it do? It jumps up dramatically to $1.60 on the open. So getting out for around $1.60, we got in for 75 cents and got out for 160. So a $750 investment turned into $1,600 in 3 and a bit days. Pretty good, right? 750 into 1600. Now that was a trade that I actually showed you in real time last week, so that one worked out very well. Here's one that didn't work out, ODT. This one closed us out on this day right here for a very small loss. The loss that we had here compared to the profit that we had here, we were still miles ahead. And that's what it's about, right? Asymmetrical risk, 4 to 1, risking 10 cents or risking $100 to make 400. We actually made a lot more than that, but that was the structure of the trade. And then the other trade we had there, an ODT, very small loss, and then obviously DBA, 32% return. So we did very, very well there. So making some good money, right? We're still in silver long term, okay? We're still in silver long term, so looking at that particular idea. And what I'm going to show my members this week is how to take a position, okay? So for example, here's one that we're thinking about, right? Again, I can't give too much detail because otherwise paid up members are going to get too upset with me. But this is one that we're looking at. This is a REIT. This is a real estate investment trust. Now, with a real estate investment trust, what they do, in order to qualify as a REIT, R-E-I-T, real estate investment trust, the company must have the bulk of its assets obviously connected to real estate investment, and it has to distribute 90% of its taxable income as a dividend. 90% of its taxable income as a dividend. So this has a very nice yield here. Okay, this is in healthcare, right? So its real estate investments are tied to healthcare facilities. Has a 3.86% dividend yield, and I believe a lot of investors right now are looking for dividend yield. The other thing with this particular one here is that it has a, if I just have a look at this one here, very nice daily squeeze. You can see the Bollinger Bands inside the Keltner channels, and this is one that we're looking at, right? We're not looking to get into it right now, but this is something here that if it does start to break above this prior high here of around 68, we may enter, right? We'll see what happens with this. But this one here is very interesting. But what I'm about to show my members is how you can get into this trade, right? Long-term bullish, if it does close above 68, of course. Then how to get into that and actually pay for it before the option expires. So for example, we would take this out to 2023 as the expiry, and I'm going to show them how to strategically sell a credit spread against this, or a cash secured put option against it, and actually pay for the bullish call option that we've bought all the way out to 2023. What does that do? It reduces the risk dramatically in the trade. And what it can do is actually pay for the entire investment. Imagine paying for the entire investment by selling options and then having a free, no risk, none of your own money involved asset that will make you money if the stock moves higher. That's what I'm about to show them. So that's going to be fantastic. They're going to be thrilled with that. They've been asking me for a while how I do that, and I'm about to demonstrate it to them right now. But again, this is not something we're in right now. It has to prove itself. We've got to get a close above 68. We don't have that yet, but that is one that we are considering going forward. Another one that we're in to the downside, we'll just have a look at this one. This is PG. Okay, this one we're into the downside. We're up about 15% so far for the week. Looks like it's up a little bit now. Okay, but we're in this one. It's looking good. We are going to, our target is 118, and if it closed above the 200-day moving average, we would exit the trade, or probably the 21. Okay, we're going to look at that just in a moment, but that's one that is doing well for us. The silver option that we are in right now is doing okay, but what we're going to do, because there is a little bit of issue with SLV, and part of the issue with that, I'll just show you here. That one. That's me looking at something else. Here it is here. Right, silver. This one here is interesting because SLV, which is a position we have long term out to 2023, they're having a little bit of problem with silver. Silver squeeze hits London as SLV warns of limited available silver. So what we're going to do is exit out of this position for a break even and get into a new silver position, okay? And we're going to do it at a very low cost. We're going to actually, before that option expires out in 2023, within 3 months, we are going to pay for that option so it is risk-free. In other words, none of our own money at risk. That's what we're going to do with this particular option as well. The reason we're getting out of SLV and into another asset, or into another silver, or another way to play silver to the upside, obviously a silver miner. So we have a look at this. The demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, SLV being the trust, which may adversely affect an investment in the shares. Okay. Now, it is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust, SLV, for the issuance of new baskets due to the limited then available supply coupled with a surge in demand for the shares. In such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrences may lead to further volatility in share price and deviations, which may be significant in the market price of the shares relative to the net asset value. In short, there's going to be a lot of volatility. It may impact the price negatively, and we need to move out of this because it's being manipulated by the big players. Silver right now is at 100-year lows compared to equities, compared to where the stock market is, right? And I think as a long-term investment with what's going on, huge money printing, all the rest of it, I think it's a very smart play to be able to have a long-term position in silver, and I'm going to show my members now exactly how I'm going to do that. So I'm going to exit out of this for a break even and move into a new silver position. So that's what we're going to be doing there. So for me right now, as far as what the overall market's going to be doing, the VIX, obviously, I am still holding this position. That is making me money as we talk. That one is looking good. We've bought the 20 strike call option, and we've got that long dated, so that one's printing money for us right now. And that is something we're going to be watching, because if you start to see that starting to have a big move up, you can look for the markets to move down. Now, obviously, we need to watch high yield bonds as well. Don't forget about high yield bonds. If they break the 50, look for the market to move down, along with junk bonds. If that breaks the 50, which is this blue line that you see here, that you look for the markets to move down as well. So a spike in the VIX, or in particular a break of the opening range, which will reset in 2 days, and junk bonds or high yield bonds breaking their 50, a daily close below there, watch for the markets to move down. The other thing that's causing me concern, like I showed everyone last week, the combined put call ratio is right now 0.75. The 10-day simple moving average, anything more than 0.75 shows excessive call buying, insanity, looking for the markets to move down. That's one thing that we look at. Another thing is the skew. If the skew is above 135, it's 140 now. That is very high. Anything above 135 is very bearish. The smart money is looking for the market to crash, or at least at least a correction. 10% is a correction, 20% is a bear market or a crash, right? 2 standard deviation move. So the smart money's worried about a crash, okay? Combined put call ratio is certainly something that is of a concern as well. Excessive call buying, an insanity point in the market when everyone's comfortably long. And we know that right now the SPX is well above its 50, well above its 200, could very easily have a reversion to the mean. We need to wait for our opening range, which will reset on Friday, but 3,900, that's the line to watch until Friday, until you can reset your opening range. And high yield bonds and junk bonds, they're the things to watch. Right now, we have our strangle on the QQQ, big move up or a big move down, we're going to make massive money, and we're long VIX right now. We're long volatility. Okay, so there's some of the things that we are looking at right now. Another area where we made good money as well, I forgot to mention, was Roku. Roku did very well for us. Okay, we're out of it now, but a very nice move here on unusual option activity, where we saw large amounts of call options being bought quite a long way out of the money. So we did very well on that in the last week as well. So there's some of the things that we're in right now. Let me know what you think. Give me your feedback, and I will talk to you all again next week. Thank you all so much for listening. My name's Sean Allison. All the best, and bye for now.